All right, guys, back to work. Back to work. A fantastic day comes to an end. Hope you guys made some money on that beautiful bull trap we talked about earlier on in the week. Now, boy, the trading gods must be looking down on us tonight because these charts look beautiful tonight. I have a number of really easy trades I'm tracking for tomorrow. We'll go over all my favorite entries, my favorite exits, because by the time we're done tonight, I want you guys have a roadmap to make some money as well. And before we jump in into my favorite trades for Quad Witching Friday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me and give me a shout out. Give me a hell yes in the comments section below. Thank you guys so much for tuning in, supporting our channel. But enough of the intro, though. It's been a fantastic, but what an amazing day today. We got one more big day, Quad Witching, coming up tomorrow, and boy, do these charts look beautiful in front of us. NASDAQ triple Qs are all ready. The E-mini and the SPY is all ready. I have three, I think, very simple but very important clues on these charts right now that are telling us where the money-making trades are waiting for tomorrow. One of those big clues is right here on these 60-minute, these hourly time frames. We are bullish overall on the S&P and SPY, bullish overall the NASDAQ and the triple Qs. I like to use these 60-minute time frames to give me the best overall directional bias. It tells us where the odds are stacked in our favor, but these hourly time frames, they don't give me support and resistance. They don't give me entry timing tactics. I have two more important clues on some faster time frames, some tick charts. We'll wrap this all together, help us time the perfect entries to finish off the week Friday morning with some more green in the bank account. Now, before we talk about those two more clues and drill down to talk entries, let's talk about the schedule for tomorrow, because tomorrow is a Friday, but it's a busy Friday. There are four things on my mind for tomorrow. First things first, big news tomorrow, 9:45 PMI composite flash, home sales at 10 o'clock Eastern time. Remember, anytime you see red star news at 10 o'clock Eastern time, you best be paying attention. Second thing for tomorrow is tomorrow's Quad Witching, third Friday of March, June, September, December, all four asset class expire. The bottom line is we expect things to be choppier than normal on Quad Witching Friday. And also, too, tomorrow is a Friday. Now, why are Fridays important? Well, Fridays get illiquid in the afternoons. Fridays like to run in the afternoon. So my kind of goal on a Friday morning is get into trades early when I'm at my best, take some profit, get rid of risk, but you'll go back and look for yourself. 3 out of 5 Fridays, they love to pick a direction and just run. So I always like to leave a runner on a Friday afternoon. And the final thing for tomorrow is we are almost halfway through the year of 2024. That means it's break time for me. I'll be off the next 2 weeks, coming back on Monday, July the 8th. So 4 things to be aware of for tomorrow. First is that big news event, 9:45 and 10 o'clock. Second thing is Quad Witching. Expect things to be choppier. Tomorrow's a Friday, right? So early in, remove risk early, take some small profit, but let this sucker run on Friday afternoons, leave a runner. And the final thing is, again, 2 weeks off, mid-year break, back on Monday evening, July the 8th. I will miss you guys, but we had a great year so far. Time to rest up, refocus, and come back stronger. So keep those on your radar for tomorrow, those 4 items. Now back to our charts, though, because we all know the money is made on the charts right now. I mentioned earlier, I have 3 total clues for tomorrow. One of those clues is right here in the 60-minute time frame. You know we're bullish overall, but again, that's not gonna help me time the best entries. Let's now move to our tick charts. Tick charts are my favorite time frame for timing entries because tick charts make pattern recognition a whole lot easier. This, by the way, is a 7,000 tick chart, all the time frames, upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA. That's pretty much the only indicator we need to find lots of winning trades each week in our trade room at 8 o'clock Eastern time. There are 2 more, I think, more important clues right here on these tick charts. One is this bear move down into a trading range. Now, why is that important? Well, first of all, ranges act like magnets, and ranges love to rotate back and forth. Now, we're an overall bull market, so I love the idea of buying reversals off the low of that trading range. Also, we also know too that ranges, because we're overall bullish, they're more likely now to break out and pull back off the high of that trading range. We'll definitely talk about some breakout pullbacks here as the video gets deeper here today. One more important clue, which is also on my radar for tomorrow. If you look back in time here, keep in mind this area right here. This was that FOMC, that PPI trading range. Remember, anytime we break out of a trading range, what happens? Markets love to break out and pull back and use the top of this bullish range as a key area of support. And you'll notice that it's right below that range we have right now. So put these clues together. We're overall bullish on the 60-minute time frame. Got this beautiful range right here in front of us on this chart. Like I said earlier, my favorite trade for tomorrow is I would love to get some reversals off that breakout pullback zone below that trading range. I have 3 different ways to time the perfect reversal. We'll talk about that quite a bit here tonight on the video. And then later on in the lesson, I want to talk about a breakout pullback, right? Because again, we may end up going higher. We want to make sure we're ready for a breakout pullback if we go higher here as well. So, well, I'll tell you, there is no shortage of ways to make money on Friday, but you got to have the right strategy. Now, my favorite trade is that reversal off of that low. Reversals come in lots of different shapes and sizes. For example, one of my favorite ways to time a reversal is to wait for a breakout. Remember, I'm not going to pick the bottom on this, right? We don't blindly trade off levels of support and resistance. What I'd rather do is wait for the price to pull back and use what I call a failure pattern. This would be a 2-try failure pattern. Trap those bears in. Remember, there's a range above us acting as a magnet. We're at a big time area of support in an overall bull market. This is a horrible place to be a seller. But if I can get some inexperienced traders committed there, I would like to use their stops and squeeze those stops for a run going back up into that trading range. Now remember, ranges love to rotate. So the amount below that range can now be projected back above that trading range. That becomes the objective. And watch closely. As we get that rotation back in, I want you to look for a bear trap. Now, bear traps are very simple. It'll look like this. First things first, it'll separate off the 21 EMA. Very important. It separates above the 21 EMA. Second thing, shallow pullback and a higher high in price. Third, get right underneath that prior swing. And fourth, a strong, in this case, green candle closing above that 21 EMA. That is your signal for a bear trap. So many ways to trade a reversal off that low. One of my favorite ways for tomorrow is to trap in those sellers, getting short in the worst possible location. Don't pick the bottom, but trap them in. Use that failure pattern we talk so much about in our free video classes. And then we know how ranges work. They like to rotate. As they rotate higher here now, look for that separation of moving average, that higher high in price, that move just below the low, strong green candle closing above the 21 EMA, and that is that bear trap pattern to finish off that move going higher. That's one of my favorite reversals here for tomorrow. Now, this pattern oftentimes ends up triggering in a double bottom as well. For example, sometimes we get lucky. Sometimes the market makes a strong run down. Oftentimes we'll get that failure pattern right here. A nice easy winner as it pops up, but you know ranges, they love to break out pullback, right? Sometimes they hold the underbelly of that range and we get another bite at the apple and it runs back down again. Remember, this is a winning trade, right? We're in 1-to-1 there. Stop moves up to point of entry, right? It's a winning trade, but we don't get that. We don't get that pop and that big swing back up into that range. Now the bears come in, they hold the underbelly of that trading range, they retest that low. Now think about how this works. Anybody who sells short right there, they become buyers at that low. They take their profit now at that low, right? So professional sellers now become buyers at that low. Now let's do it again. As we now pull back to that moving average, remember, we're not going to pick the bottom on this. Wait for rookies to get in. This is the last place you want to sell. We're bullish overall. I know it seems very bearish right now, but we're not a bear market overall. This is a beautiful spot to get long. I'm going to look for those bears now to try once, try twice. Why twice? Because I want those stops, right? Those stops are going to give me the fuel I need to go back up into that range. And again, do not forget about this pattern right here. I know you guys love this pattern, right? It pops up, it separates off the moving average, right? That pullback right there will separate away from the moving average. That's how you know it's setting up for a bear trap. Higher high in price, move right below that low. You want that nice, strong green candle above the moving average. Again, we call these double bottom retests. And I'll tell you, these are oftentimes the most lucrative trade. Leave that run because, again, it's a Friday afternoon, right? Tomorrow afternoon. Now, let's slow down for a second because I know most of you guys watching right now, you know these patterns, you know failures, you know what we love, traps, you're making money with these on your own. But if you're watching right now for the first time, this might be a brand new language for you. What the heck is a bear trap? What are failures? How do range rotations work? Don't you worry. I teach all these entry patterns. I have hundreds of examples of range reversals, failures, traps. I cover everything in a lot more detail in our free video classes. I'll put a link up top here for you. Upper right-hand corner. Don't you worry. Upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy you'll learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. And most importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, you're doing traps, failures, and a whole lot more. It's all covered in a lot more detail in that short video course, guys. The markets are so good right now. If you're not making consistent money every day, if you're still taking lots of losses, if you're struggling to qualify for a funded account at Apex or Top Step, hit that link, take that free course, give you an easy roadmap to follow every day. Perfect for someone who's trying to make the jump into full-time trading. Also, too, if you can't get a link up top there, I'll put all the important links to talk about tonight in the description of the YouTube video. Put the free class links down there. Start there first. Learn the basic strategy. Start making money on your own. We trade together every morning, 8 o'clock Eastern time. I'll put trade room membership links down there for you. And I'll tell you, I post a lot of updates on Twitter or X during the day. If you're on Twitter X, give me a follow. Again, all the details you need, the description of the YouTube video. But again, most important thing, start first on that free video course. Learn how to time the entries with failures and then keep adding on with those bear traps going higher here. Now, I do want to cover that breakout pullback a bit later on in this video because that is another of my favorite trades here for tomorrow. But first though, let's talk about kind of a variation of this. So I mentioned earlier that I do want to get lower, trap the bears in and squeeze those stops, right? My favorite way to trade a reversal. But you know what? This is a great area of support down here. We're so high up here on the chart right now. We may get that run down and it may just wham right back up into that range here. What if we don't get that bear trap down there? What if we can't trap the bears in? How do you trade a V bottom off of that low? Well, it's actually pretty simple. If we get a very strong reaction off that low, what will happen is it'll begin to grind and go higher. Okay, the grinder is the giveaway. The sooner you learn to look for this, the better off you'll be. If it V bottoms off that low and begins grinding up, easy giveaway. Draw a trend line off the highs, bring it down off that low. That creates a channel. And then the best entry I know of is to look left and find one of those prior swings, a swing low, that lines up right around the low of that channel. Okay, this is where the money lives in a V bottom reversal. Now, these are oftentimes bear traps like this one. Sometimes we get below the moving average. It becomes a failure pattern below the EMA. Failures lead to pullbacks, right? Failures lead to bear trap patterns. All the same entry patterns you guys are learning inside the free video course. All right, guys, so just keep in mind on that too. Again, not the most desirable trade because I would rather get down, trap those bears and then squeeze those stops back up again, right? I would be buying nice and low there. But if we can't, if the market V bottoms off that low, grinds up, do not chase after it. Wait for the pullback, get that bear trap, get that failure, get that bear trap, that pullback combination. Again, if you're watching for the first time right now, I get it. This could be a brand new language for you. Hit that link I posted up top there, description there in the video, and that will give you a much better breakdown of the terminology and the setups I'm talking about here right now. Okay, so now we know how to buy this thing, reversals off of that low. Now let's switch gears now and talk about as it rotates here, if we get that breakout and that pullback, because I'll tell you, there are two really easy ways to make money on a breakout pullback if it reverses going higher here for tomorrow. S&P looks great. How about some NASDAQ right now? NASDAQ's looking lonely over here right now. NASDAQ, 60-minute time frame. You can easily see here, we're bullish overall. You probably don't need my help to tell you that. The tick charts look, they look gorgeous right now. These, like I said earlier, it seems like we must be in the good graces here this afternoon of the trading gods, because this is basically a bear trading range. It's basically a bear trading range in an overall bull market. This is almost as easy as it gets. If you guys watch these videos quite a bit, we see a lot of these in our trade room. So again, ranges love to rotate back and forth because they're a magnet. And because we're overall bullish right now, my favorite trade is the reversal off the low. We mentioned the failure patterns, the bear trap patterns, the V bottom patterns, right? So same patterns talked about earlier on the S&P. But again, because we're overall bullish, a breakout of that trading range into a breakout pullback could easily be one of the easiest monies. So talking about that right now, let's dive into the breakout pullback. Now, earlier on the video, I talked about if we go down, go up, and separate off the moving average. Right? Remember earlier? That separation off the moving average, that is a big part of a breakout. For example, if we pop up, remember, we're into resistance with a range below us, right? So there's a decent chance here they will whack this thing right back down again, and I will talk about how to short that in a few moments. However, if we do push higher here and we begin to see that separation away from the moving average, remember that's the key here. The key to getting a good breakout is we got to get up, pull back, and begin to see it separate off that 21 EMA. Very, very important, that separation. It tells us that the bears are weak, and it tells us that the buyers are strong. With that said, what we'll do is, again, higher high in price and look for that bear trap below that low, all right? Again, it's a bear trap pattern. You buy bear traps on separation. You buy bear traps on separation above the 21 EMA. Now, ranges, when we break out of a trading range, the breakout leg becomes a measuring leg. Okay, so the size of that breakout leg, I can then use as a target up here. I don't know exactly where it'd be right now, but that's the formula, right? The size of the breakout leg becomes the measuring leg, and that will tell me where to take my profit on that breakout going higher. Now, very, very important. If we can get that breakout going higher, if we get that separation we want, get that bear trap running higher here, measured move is target, right? Now, at this point now we do not want to buy high, right? The highs are way up top there. We don't want to buy high. I want to buy nice and low. This trading range is our best friend right now, okay? Let's talk about a breakout pullback. Now, breakout pullbacks are super, super easy. You want to think about a two-legged pullback. Now, what's a two-legged pullback? Well, in the free video course, as mentioned earlier, we talk about measured moves, right? What's a measured move? A, B, C, D, right? A symmetrical two-legged move, right? Okay, when we get a breakout like this, I look at the breakout pullback. What I'm trying to do here is combine the top of that trading range along with that two-legged pullback. Okay, somewhere right in that area there. And again, I wish I had more details right now, but that's the formula for it, right? A two-legged pullback under the moving average, a bit more than a measured move. Now, as I always tell you guys, we're not going to pick a bottom on this. I'm not going to blindly buy that pullback because for all I know, it'll get crushed and I'll run all the way back there. I'm not going to blindly buy that. What I'll do is I'm going to use that same game plan, right? Trap those bears in, get those rookies coming in chasing twice, because now I can use that failure into that, what was it again? That separation first, right? Always very important. Separation, if I can draw here, right? Separation off that moving average. You know what I'm saying, right? Separation off the moving average, higher high in price, and right below that low, that becomes your bear trap entry. Now, in my experience, this usually gets combined. So one big leg, right? Measured leg up here, right? So think about kind of stacking those together and making those measured moves for targets. And again, tomorrow afternoon, you better leave a runner because these love to run into the close on Friday afternoon. So think of this sequence now. Again, it's that strong pop up. Remember, do not force that trade long on the breakout. Get that separation of moving average, get that higher high in price, And again, it's nothing more than a bear trap like I teach in the free video course. Strong green candle, that's your signal. Find your measured move, and that becomes your target on the way up. Once you reach your measured move, stop buying up here. Do not buy that pullback right there. That's not the pullback that you want. That's a rookie trade right there. You're chasing after it now. You're buying too high. Now we wait for that two-legged pullback, a bit more than a measured move. Again, ideally, I'm going to combine that two-legged pullback with the top of that range for the breakout pullback. And again, trap those bears in. Failure pattern. Get that pop up. Separate off the moving average, above moving average, higher high in price, bear trap. And again, try to combine those two legs with that leg right there. And man, oh man, that would be a fantastic way to finish off the week tomorrow afternoon. Now, one more thing. Remember, this range below us is a magnet. There's a decent chance here we get this thing to go up first and then back down and get a beautiful reversal off of that low. These happen a lot. So how would I short off the top over here? Okay, there's only one type of trade I'm looking for. It's a V-top reversal. It's not a crown reversal, all right? I can already tell people are wondering, well, why not a crown reversal? Because we're low right now, right? We're not way high up, right? Earlier on in the week, on Tuesday, we were way high up. These are areas where a crown reversal will work when you're way high up like that we saw today on the S&P. I'm not looking for a crown reversal right here. Okay, that is not going to be higher percentage enough. What I will do though is if we do see this run up and we get whacked right back down again, because again, I think a lot of buyers would love to buy in that breakout pullback zone, because again, the NASDAQ is just like the S&P, right? Where there's that range we had during FOMC and PPI, right? That range is still a breakout pullback. We have not come back and touched that area yet. So I would love it if we went a little bit lower first and then back up. That would make my job a little more lucrative tomorrow, if you will, right? So we may end up running higher. We may not get that separation off the moving average, right? For that bear trap entry, we may wind up running up, getting whacked back down again. And again, how do we trade V-tops, V-bottoms? We look for that V-top and we wait for the grinder. The grinder is the giveaway, because again, what the grinder does is the grinder tells us momentum now is shifted. Okay, in an overall bull market like this, after a big deep pullback, I have to be careful looking for shorts right now, because again, we have a nice deep pullback in the bull market, not as easy as calling a top like we did on Tuesday evening. So draw that trend off the low like that, up around the high, look left, and you want that first test. You want that first test off the high of that channel. Again, it'll run up, right? You won't get that separation. It'll whack back down, grinding down. Remember, ranges love to rotate. So the amount above, the amount below, we know where the market wants to go, right? It wants to rotate back and forth like this. We want to buy the low down there. On the way down to that low though, right? Now go out, mark that low, mark that high, mark those swing highs up here. And again, I love trap patterns. You guys know that. This could be a trap pattern like this. It could be a buyer failure pattern above the moving average, right? Buyer failure above the moving average like that, right? A failure into pullback combination. And again, we know in that situation, you know where the market wants to go, right? So leave that runner. In these situations though, we're bullish overall. So half off comes off, right? Half off comes off at the low of day down there, right? Good spot there, but leave that runner all the way to that pendulum swing. And then once you get there, right? Then the good stuff comes back in. Trap those bears in again. 1, 2, failure into bear trap combination. So all the same stuff we talked about earlier on the S&P can be applied down here, even if we go up and roll back over again. All right, guys? So game plans are the same off of that low. So keep in mind on that V top off the high. And again, be careful, right? It needs to run up and then show me that change in direction before I can trust this, because there's a good chance here it pops up and keeps going, right? Then get that breakout pullback from there. Because again, we have a nice deep pullback now overall, and we're very bullish, of course, overall. Hope that makes sense, guys. Any questions, hit me up in the comment section below. I'd be happy to answer more questions and more details here in the comment section. All right, that is the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, the easiest way to start making consistent money in these markets to learn and trade along every morning in our trade room. I'll put all the important links tonight, the free class links, our trade room membership links, my Twitter feed stuff, all details, description of the YouTube video. Start first on the free video course, start making money on your own. And again, as always, any questions, concerns, any trouble getting started, don't be afraid to call the office or leave a comment in the comment section below or leave a chat message there for us on our live chat. Right, guys? Well, what a fantastic week it's been, a killer day. Today, of course, in the morning trade room. One more day tomorrow, quad witching tomorrow. The game plan's all set. I will miss you guys next few weeks here, but back again July the 8th. And as always, guys, hope you guys make some money tomorrow. Be well, be next to each other out there, and be here next time. Adios, amigos. Bye for now.